This is John Gilbert, one of the advisors at Security First Asset Management with a weekly market update. Now this weekly market update is for last week, April 13th through April 17th. Before we get into that, just wanted to remind everyone who is RSVP'd of our food truck and shred event that will be happening this week in the back of the Macon office, in the back parking lot of the Macon office. That will be from 4 to 6 p.m. If you have anything that you would like to get shredded, bring that along and then get you some food from the food truck. Alrighty, now into the actual weekly market update itself. So just a few weeks ago, there were major concerns about stagflation, and there was a near correction in the S&P 500, and those things were dominating headlines as the conflict in Iran was causing some historic oil supply disruptions. However, by mid-April, optimism has returned, driving equity indexes to record highs thanks to hopes that there is going to be a Middle East peace deal in the near future and strong corporate profits. Now, just as a reminder, this is for last week, so the weekly market update is based off of what happened in markets last week. That's April 13th through April 17th. So the major domestic equity indexes posted very strong gains, and that was the third week of positive results in a row. So several of the major indexes hit record highs, and there were signs of de-escalation of the conflict in the Middle East. There was upbeat earning results, and there was a series of generally positive economic data releases. So the geopolitical developments were one of the main things that were a key focus of last week. And so with the U.S.-Iran ceasefire looking like it was going good and continuing negotiations between the two countries, and then there was also what went on between the Israel and Lebanon ceasefire agreement. Those things sent oil prices lower and really helped to bolster markets. And so some of the shift that we saw in markets, the fast market rebound that we saw, was due to there is an idea that there is a reduced worst case scenario risk. People are no longer thinking that the worst case scenario is going to happen in this situation. There's some easing oil prices as oil prices are down from their March peaks. There's also some consumer resilience as the result of tax cuts. As people have been filing their taxes and getting their refunds back, the consumer has a little bit more. Those tax refunds are almost acting as a household stimulus that are helping to bolster the households as they weather the higher oil prices. Also, strong corporate profit earnings came out last week, and things are looking good on that front. There's also a sentiment reset, whereas people are kind of unwinding some of the defensive positions that maybe thinking that maybe they reacted a little too harshly to begin with. So markets now seem to be focusing more on the fundamentals. However, they're still paying very close attention to the ongoing geopolitical environment and the uncertainty around that. If y'all have any questions or would like to know about our upcoming events, please reach out to us. Thank you so much and have a blessed day.